Hey everyone, Albert Stepniak, your friendly real estate agent here in Florida, bringing you the latest market insights that could impact your home search or sale here in Florida. Let's talk about some important economic indicators first. The big economic news that came out this week was the Consumer Price Index, or CPI, report for June. This report is basically our scoreboard for inflation. It tells us how much prices are changing for everyday goods and services like groceries, gas, and even things for your home. The good news is that the numbers for June came in pretty much as economists expected, showing a moderate increase from May. Prices were up 0.3% from May to June and 2.7% higher than they were in June of last year. So if it feels like your dollar isn't going as far, you're not imagining it. Now, you can look at these numbers in two ways. The glass half full view is that inflation is behaving as predicted, and it could certainly be much worse. But if you take the glass half empty view and look at specific categories, you'll see some interesting shifts. Economists were particularly watching areas that might be affected by recent tariffs, which are those taxes on imported goods. And it looks like June might be where we start seeing some of that impact. Categories like household furnishings, which includes things like flooring and window coverings, saw a 1% increase, with tools and home appliances going up even more. All of those numbers are definitely getting the attention of the Federal Reserve, or the Fed, as we call them. They have a big meeting coming up at the end of this month, July 29th and 30th. The Fed controls a key short-term interest rate that basically sets the tone for borrowing costs across the board. They've kept this rate steady since December of last year, and Federal Reserve Chair Jerome Powell recently said that they would have already started cutting rates this year if it weren't for the tariffs. He basically said they need to wait and learn more about how these tariffs will impact prices. Before the CPI numbers came out, some people were still holding out hope for a rate cut at the upcoming Fed meeting. But after seeing these inflation figures, those hopes are dwindling. The Fed's main job is to keep prices stable, and higher interest rates are their primary tool for managing inflation. So if they take that glass half empty view on the recent CPI data, a rate cut from the Fed is looking extremely unlikely for now. Okay, you might be thinking, that's interesting, but how does this affect my mortgage rate? Well, while the Fed doesn't directly set mortgage rates, they certainly react to the same economic ups and downs. For example, the strong job report we saw on July 3rd, while great for the economy, is another argument against lower interest rates. And indeed, that news helped push mortgage rates higher. When you combine that strong job market with concerns about rising inflation, you've got a recipe for mortgage rates that are likely to stay higher for longer. This can be tough news for folks looking to buy a home in the second half of 2025. Higher mortgage rates just add to the existing challenges of affordability. And remember, tariffs and inflation aren't just big concerns for the Fed. They affect your everyday household budget too. As one economist put it, prospective homebuyers are increasingly feeling the financial stress of higher prices for everyday things, which makes it harder to think about buying a home. And here's a quick update on mortgage rates that might bring a tiny bit of good news to prospective home buyers out there. The average rate on a 30-year fixed mortgage slipped down to 6.74% from 6.75% last week. And if you're looking at a 15-year fixed rate mortgage, which is popular for refinancing, those rates dropped a bit more to 5.87% from 5.92% last week. Every little bit helps, right? Now, I'll be honest, this slight drop offers some relief, but it's important to remember that we are still facing pretty high home prices. So while the rates nudge down, the overall picture for affordability is still a challenge for many. These elevated mortgage rates have really been weighing on the US housing market. We've been in a bit of a sales slump ever since 2022, which is when rates started climbing pretty quickly from the super low levels we saw during the pandemic. Last year, sales of previously owned homes actually hit their lowest point in almost 30 years. And that sluggishness has continued into this year. It's tough out there for many Americans because rising home prices combined with these stubbornly high mortgage rates have made owning a home financially out of reach for quite a few people. So while any drop in rates is a welcome sign, it's just a tiny step in what's still a challenging market for buyers. If you're considering a move, it's more important than ever to get a clear picture of what you can comfortably afford and explore all your options. I'm here to help you navigate these waters and find the best path forward in the South Florida market. So if buying a home is on your radar, it's a smart move to make sure your home buying budget can comfortably handle slightly higher mortgage rates. That way, if rates do happen to fall, you'll find you can afford even more house. But if they rise, you'll still be on track to achieve your goal without added stress. Planning ahead is key in this market, so if you have any questions about what this means for your specific situation, feel free to reach out. I'm always here to help. But here's the surprising part. Despite those higher rates, we're actually starting to see more buyers popping up. Why? Well, for a couple of reasons. One big factor is that there are more for sale signs out there. We are seeing more homes available, which gives buyers more choices. And with more choices, there is a potential for you to have a little more bargaining power when you're negotiating with home sellers. In May, first-time home buyers made up 30% of all home purchases. Now, that's still below their usual average of 40%, but it's a big step up from last year when they hit a record low of just 24%. This tells us that first-time buyers are definitely making a comeback. It seems like home buyers are really starting to adjust to these rates in the mid to high 6% range. They are finally accepting that the super low 3% rates we saw in the early days of the pandemic are for now a thing of the past. Having a more predictable interest rate, even if it's higher than before, might actually be giving first-time buyers the confidence they need to jump into the market and explore all those new choices in homes for sale. Even though some buyers are still a bit nervous, we did see a slight dip in mortgage applications the week before because rates nudged up a little. Remember, the good news is that the number of applications is still 13% higher than it was this exact week a year ago. The good news is that these are serious potential buyers. For the first half of this year, mortgage applications for home purchases have consistently been above last year's levels. So the desire to buy a home has turned positive. It's just a matter of when mortgage rates might come down a bit more so we can see an even bigger increase in home sales. What does this mean for you? If you've been on the sidelines feeling a bit hesitant, these numbers suggest that buyers are finding ways to make it work. With more homes on the market, you might have more options and potentially a stronger position to negotiate. If you're ready to explore what's available and how these trends could benefit your home search, let's chat. I'm here to help you navigate these shifts and find your perfect place. Now, I've got some fresh insights from the latest Florida housing market report for June and the second quarter of 2025. This is exciting news because it shows some positive shifts that could mean great opportunities for you. First off, let's talk about single-family homes. We saw closed sales for existing single-family homes across Florida actually increase by 2.8% in June compared to a year ago. That's a big deal. This is the first time we've seen a gain in single-family sales since January. This rebound really helped to balance out what would have been a slower second quarter overall for home sales. Now, if you've been hearing about inventory going up and prices easing a bit, that trend is continuing. We're seeing more homes available for sale, which is fantastic news for buyers. And the median sales price for homes are showing signs of moderating, meaning they're becoming a bit more stable, which can be a relief for buyers after a period of rapid increases. For single-family homes in June, the statewide median sales price was $412,000, which is actually down 3.5% compared to June of last year. When it comes to condos and townhouses, the picture is a little different, but still shows some positive movement. While sales were down 6.4% in June compared to last year, that's much less severe than the 20% decline we saw in May. So it looks like that market is starting to stabilize a bit as well. The statewide median price for condo townhouse units in June was $300,000, down 7.7% from a year ago. What does this all mean when we talk about supply? Well, for single-family homes, we're currently sitting at about 5.6 months supply. This is generally considered a pretty balanced market, not really favoring buyers or sellers too much, but offering good negotiating ground. For condos and townhouses, though, we're seeing a 10 months supply statewide. When you have a higher month supply, it means there is more inventory compared to how quickly homes are selling. And that definitely gives buyers more power at the negotiating table. As Florida's housing market moves towards a more balanced state, we're seeing opportunities emerge for both buyers and sellers. Motivated sellers who understand how today's market works are attracting qualified buyers, and buyers are finding more choices. Whether you're buying or selling, having a realtor by your side is crucial because we have the true insight, real data, and experience to guide you through this evolving market. So if you've been thinking about making a move, these numbers suggest that things are shifting in a positive direction, particularly for buyers. More homes, moderating prices, and a bit more negotiating power. It's an exciting time to be in the Florida real estate market. If you have any questions or want to dig into what these trends mean for your specific area, like Delray Beach, where I live, don't hesitate to reach out. I'm here to help. Now I've got some potentially great news for those of you who've been patiently waiting to jump into the housing market. We're seeing some interesting shifts, especially when it comes to new home prices right here in Florida. For a while now, it might have felt like home prices were just constantly going up and up and up. But if you've been holding out for things to cool down a bit, now might just be the perfect time to start seriously looking, especially at new construction. We're seeing prices for newly built homes actually come down in many of the country's most popular markets, and that includes some big spots in Florida, California, and Texas. So why are these new home prices starting to fall? Well, there are a couple of main reasons. The first is that builders are sometimes starting to build new communities a bit further away from busy city centers. Land out there can be a little less expensive, so that alone can bring down the overall price of a new home without the actual value of the house necessarily dropping. It's just a different location. The second reason is what we call market response. If homes become too expensive for people to afford, or if buyers just start to feel less confident about the economy, then demand slows down. When that happens, builders have to find the market. This means they'll start to lower prices to attract buyers and keep their projects moving forward. It's all about supply and demand. We've seen prices drop considerably from their recent peaks in several markets as of April 2025. This is creating some exciting opportunities for you as a buyer, leading to things like more affordability, potential better deals, and even builder incentives like contributions towards closing costs or interest rate buydowns. So while homes in many areas are still pricey, these recent drops signal a real shift in favor of buyers. You might actually find some good value in the new home market right now, especially compared to some resale properties. What does all this mean for you? It means that if you've been on the fence about buying, or if you felt priced out of certain areas, now could be a fantastic time to revisit those options. You might find builders offering really attractive incentives to get you into a brand new home. These lower prices might not last forever as the market continues to adjust. So today's opportunities could become tomorrow's missed chances. So if you're curious about new construction opportunities in our area, or want to understand how these price shifts could benefit your home search, let's connect. I'm here to help you navigate this evolving market and find the perfect home that fits your budget and your dreams. Now let's talk about something super interesting that's really changing the game in Florida's real estate market. Younger buyers are leading the way. Florida is just booming with new residents. Over 1,500 people are moving here every single day. And a huge chunk of those folks looking for homes, more than 60% in fact, are millennials or Gen Z. What does that mean for real estate? Well, it means we as agents are really adapting how we connect with you, because this generation grew up with digital tools and social media. And that's where they're doing a lot of their home buying research. So for us real estate professionals, it's all about embracing a digital first approach. This includes really smart tools and even using artificial intelligence to show home listings that are perfectly matched to your behavior, your location, and what you're interested in. This helps us avoid wasting your time and our resources by showing you homes that aren't quite the right fit. When it comes to building a community and connecting with you, platforms like Instagram and Facebook are fantastic. They are great for placing ads, but also for sharing stories and showing off properties. LinkedIn, on the other hand, is more about connecting with investors and other professionals in the industry. For quick chats and immediate updates, we often rely on texting or other messaging apps, WhatsApp, right? And if you're like longer form content or want to dive deep into educational topics, YouTube is a great place for us to share videos and virtual tours. Of course, good old email marketing is still super valuable for keeping in touch, nurturing relationships, and getting referrals. Ultimately, you want to be there for you at every step of your home buying or selling journey, from the moment you start thinking about it all the way to closing date. We use tools that help us keep our communication smooth and consistent across all these different platforms. This allows us to personalize our messages and even automate some follow-ups, making sure you always feel supported and informed. What we've found is that real estate companies who really invest in dedicated marketing and social media support see nearly 40% more interested buyers. And when we run paid targeted campaigns, we see 6 times higher engagement with our listings. Plus, when we share engaging stories and keep a consistent voice in our content, we build much greater trust with you and the community. It's all about connecting in a way that feels natural and helpful to you, the modern homebuyer. Now, did you know that Florida is now home to 5 of the fastest growing major metro areas in the entire United States? That's right. Places like Orlando, Cape Coral, Lakeland, and Deltona are truly booming, taking top spots on a recent Boomtown ranking from LendingTree. In fact, our very own Northport is ranked as the 3rd biggest boomtown in the country. It was ranked 6th in a similar study before, so it's really climbing the charts. This study by LendingTree looked at 100 of the biggest metro areas across the US using 8 different measures grouped into categories like people and housing, work and earnings, and business and economy. Northport, for example, ranked super high in people and housing and business and economy, showing just how well-rounded its growth is. It's incredible to think that 5 out of the top 10 fastest growing metro areas in the whole country are right here in Florida. And 8 of the top 10 are from the southern US overall, showing a strong regional trend. Austin, Texas took the number 1 spot, but Orlando came in 2nd. And then Northport right behind it at 3rd. And like I mentioned, Cape Coral, Lakeland, and Deltona also made it into that top 10 list. So what does this all mean for you? If you're looking to buy in Florida, especially in these booming areas, this population growth signals a vibrant, growing economy with lots of opportunities. And for those of us already here, it means continued positive development in our communities. If you're thinking about buying, selling, or just want to know more about these exciting trends, reach out anytime. I'm here to help you understand how this booming market can work for you. Now, on the national level, let's dive into the latest on what's happening with existing home sales in June. It's an interesting mixed bag of news, so let's break it down in a way that makes sense for you. First off, nationally, we saw a slight dip in existing home sales in June, down about 2.7% compared to May. Sales went down a bit in the Northeast, Midwest, and our very own South, though the West actually saw a small increase. However, the really big news, and it's fantastic for homeowners, is that median home prices hit a record high of $435,300 across the country. This really shows how the wealth of American homeowners continues to grow. In fact, the average homeowner has seen their wealth grow by over $140,000 in just the last 5 years. That's some serious equity. So why are prices still so high even if sales are a little down? Well, it really comes down to years of undersupply. We just haven't been building enough homes to keep up with our growing population. This shortage is a big reason why prices keep climbing, and it's especially tough for first-time home buyers trying to get into the market. We absolutely need more homes to be built to truly help those first-time buyers, even though some markets might feel like they have a temporary oversupply right now. Now, let's talk about mortgage rates because they're a huge factor. Rates are still hovering in the mid to 6% range as of today. These higher rates are definitely making home sales stay at what we call cyclical lows. It means fewer people can afford to buy right now. If mortgage rates were to drop to, say, 6%, we could see a huge boost. An additional 160,000 renters might become first-time homeowners. And we'd see much more activity from existing homeowners looking to move. Getting more people involved in the housing market will help our workforce move around more easily and really drive economic growth. So if rates do come down in the second half of this year, we can definitely expect home sales to pick up across the country, especially with strong income growth and healthy job numbers. On the positive sides for buyers, inventory is actually going up. The total number of homes for sale in June was up almost 16% compared to a year ago. This means more choices for you. We now have about 4.7 month supply of homes available nationwide, which is up from last year. More options on the market can give you a bit more breathing room and potentially more bargaining power. Quick look at the numbers shows that the median time a home stays on the market in June was 27 days. That's a bit longer than last year, giving buyers more time to decide. It's also really encouraging to see that first-time home buyers made up 30% of sales in June. While not quite back to historical norms, it's a solid improvement from last year's record low. We are also seeing about 29% of transactions being all cash sales, which means less reliance on mortgages for some buyers. Regionally, sales saw slight dips in most areas month over month, but some regions like the Midwest and the South actually saw sales increase year over year. Prices generally went up across the board compared to last year, with the Northeast seeing the biggest jump in median price. So, what's the takeaway for you? While higher mortgage rates are a challenge, the increasing inventory is giving buyers more options. Prices are still strong, which is great for homeowners' equity. The market is adjusting and there's a strong desire for homeownership. If you're thinking about making a move, understanding these trends is key. Let's talk about what's happening specifically in our local market and how we can work together to achieve your real estate goals. All right, that wraps up another deep dive into the Florida real estate market. I truly hope today's insights empower you. Whether you're actively searching for your dream home, strategically planning a sale, or simply keeping a pulse on the dynamic landscape here in Paradise. It's always a pleasure to share these updates with you, and I'm so grateful for your continued viewership. Remember, your questions and topic suggestions are invaluable. They help shape these videos into the most useful resource possible. So please don't hesitate to drop a comment or reach out directly if there's anything specific you'd like to see covered in a future episode. Thanks again for tuning in, and I look forward to catching you right back here next week for more real estate news and tips.